Today I'm going to walk you through every single holding that I have in my M1 portfolio and a couple other portfolios, and I'm going to show you all the dividends that I'm making from all my different investments. So let's get into it. Watch through to the end to see how much I make from all my different dividend investing, and subscribe so that you can see more, so that I can give updates on my portfolio and on stimulus and stuff like that. It'll also make me feel better because it is snowing hard here in Michigan. The stock market has been insane recently. In theory, you want to be able to take your dollar and then some years later, after you invest it into your account, you want to be able to pull out $10. Now, a lot of the time, it feels and it looks like you're gonna just pull out 25 cents because the stock market's very volatile. So one way people get around this is to invest in something called dividend paying companies, which are companies that will pay you out a portion of their profits in cash as opposed to just reinvesting in the company. So then you can take those profits and do whatever you want with it. That helps you stay calm and also can show you how much income you might be able to get from just your investments in dividends. So I'm going to walk you through my entire portfolio. Hopefully this makes you feel a little bit better. The stock market drops 10% in a day, so these dividends hopefully will smooth out your investing career. This is my M1 portfolio. So I have a good amount of holdings in here. I'm just going to take you through each one. Facebook stock doesn't pay a dividend or anything like that, but it's my largest holding. As you can see, I have 4.8 shares, and they were an average cost of about $155. The largest dividend paying stock that I have is Foot Locker, FL, and I have $725 worth, 31 shares. They pay an annual dividend of $1.6. So pretty big dividend payer there. They're my largest dividend payer here, and they pay me on average about $50 a year. So from there I have the index. Now I have $712 there, and they are one of my largest holdings. They do pay a dividend. They paid about a 2% dividend last year. That will probably go down this year with everything that's going on right now, but that would equate to about $14 worth of dividends throughout the year. Berkshire Hathaway is my next largest holding, and I have over 3 shares there, but they don't pay a dividend. They are known for not paying a dividend. My next biggest holding is VNQ, which is an index fund for real estate investment trusts. They pay dividends, and I have about 6.3 shares, and I have about $500 worth. They pay an annual dividend of $3.18. So all in all, I make about $20 a year in annual dividends from them. They pay quarterly. IIPR is a real estate investment trust, and they invest in the medical Mary Jane space. So they buy the properties from different places and then lease them back to the companies that grow it. So I have almost 4.7 shares in IIPR, and they've been growing their dividend a lot. So they pay on average $4 a year. They pay $1 per quarter. So that will equate to almost $19 in dividends. Next, I have SPHD, which is an index fund of some of the least volatile, highest dividend yielding stocks, and I have almost 6% in them. They pay monthly, so they give a smaller yield each month, but then they pay monthly, and I own about 10.5 shares, so that equates to about $19.30, $19.32 each year. Now I have NRZ. This is one of my worst holdings that I've had just for capital gains, but they're a mortgage REIT. I own almost 55 shares of them. I bought them at an average of $7. Now they're worth $5.20 basically. And they were paying $2 annually before, and now they're paying 20 cents annually, which that's still about a 4% yield, but they went down a lot. So they cut their dividend by 90%, but I still get about $11 a year from them. If they ever bump it back up, I'll be making over $100 a year from NRZ. My next holding is JP Morgan Chase. I own about 2.9 shares for a total of $277. They pay a nice dividend of about $3.60 per share, which equates to about $10.50 throughout the year. Next, I have Qualcomm, and I own about $270 worth there, 3.5 shares. They also pay a dividend of about $2.48, and I make almost $9 a year from them. The next company is Skyworks Solutions. I own $265 worth, almost 3 shares. I want to buy more of them, but I just haven't had that ability to yet. I get about $4.89 a year from their dividends. Okay, now I have Carnival Cruise Lines, also one of my worst companies for capital gains. I bought at an average of just over $17 a share, and now they're worth $12.50. I own over 20 shares. I don't believe they've announced their dividend cut yet, but I'm sure that they will cut dividends. They were paying an average, they were paying an annual amount of $2 per share, but that will probably go down. I included them in my calculations, but I said that they weren't safe, so I also took them out for a different calculation. But that would pay me an annual amount of over $40 a share. Now, I also hold Wynn Resorts. If you don't know, they're a hotel company. They work in the higher end. I own about 2.5 shares. This is one of my better companies for cost basis, and they pay an annual dividend of $4 per share, so I get about $10 a year. They might also suspend dividends, but we will see. Disney is my next holding. I own just over 1.6 shares, and they also pay a small dividend of $1.76, so I'll get about $3 throughout the year for Disney. I think they just pay out 2 times a year though. Then Delta Airlines, I own 6.5 shares. They have not done well overall. They might slash their dividends too. I put them in the same boat as CCL and said that they're not safe, but I get paid over $10 a year in annual dividends. Then my last stock in this group is AT&T. I own just about 3 shares, and they pay an annual dividend of $2.08, and I get about $6 a year from them, $6.30. Now, I also have accounts with SoFi. Now, my account with SoFi is a lot smaller. I just was investing a little bit since it's not a tax-advantaged account, but I have $2 shares of CMA, which is a small regional bank, and they pay an annual dividend of about $2.68. It's a really high yielder right now because the stock price has gone down. It's been about cut in half in the last couple months, and that gives me about $5.36 a year. I also hold BRKB, which is again Berkshire Hathaway, no dividend. Facebook, which pays no dividend. Foot Locker, I have 4 more shares of Foot Locker, and that will pay me about $6.40 a year. I have 8 shares of CCL, which will pay me about $16 a year, but again, I don't think that that's safe. And then I have NRZ stock, which will pay me 60 cents throughout the year between the 3 shares that I bought. So a lot of those stocks were stocks that I was buying in March and April of 2020. These might be stocks that you want to invest in with your $1,200 stimulus checks. Those stimulus checks were just going out today for the most part. Some of them had already been sent out, but the majority of them are coming out today. So look into these companies. I can't give you suggestions on what you should buy, but these are just what I thought were good companies. In addition to those dividends that I had there, the $176 from my M1 portfolio, and then the $28 but only $12 of safe dividends from my SoFi Invest. I also have a large amount of my money in index funds and retirement accounts through work, and also one other employee stock purchase plan. In between all those index funds, I have another $289 worth of annual dividends that I get paid. And then I also have something called an RIA, retirement investment account, through my work, which is essentially just a pension plan, but it pays out 3.8%, give or take, every year, and my company contributes to that. I don't have to contribute. I have about $1,300 in there, so I get annual dividends of about $50. And once I quit the job or after I transition to a different job, I can either collect those annually, monthly, or as a one-time payout. So that's another $50. All in all my dividends will pay me about $594, but about $527 of those are safe dividends. So I get paid out a large amount generally in dividends. At least for me, that's a large amount, $500, and I'm going to continue to grow that. The index funds don't pay the highest dividends, but they do pay a dividend, and they're a little bit safer spreading out your money. So that might be a good option for you if you're looking to invest your stimulus check.